Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 162, 3 health insurance tips. I hope all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to talk about 3 very important health insurance tips. Health insurance is probably one of the hottest topics that we discuss with our clients here at Falcon Wealth Advisors. And I think it's important that our listeners and our viewers of Upticks understand how health insurance works and things that you need to be aware of when you're looking at it. Okay, so I'll dive right in here. So the number one tip here is to budget health insurance in your financial plan. Now, this may be obvious to many of you out there. However, when you're planning to retire, if your company has been paying for your health insurance, or maybe your health insurance premiums have been very low over the last 30 years, it might be something that you've overlooked or may overlook as you're heading into retirement. So you definitely want to get that figure accounted for. So if you're paying $300 a month and it's going to go to $1,300 a month, we want to make sure and we want to plug that into the financial plan so that we can make sure that your cash flow can cover those new health insurance premiums, right? So it's very important that you account for it in your retirement plan. Very important tip in there. And along with that tip, there are several different ways you can go about accounting for it. Many of our clients will choose something called COBRA, which is just simply an option to stay on your employer's plan for 18 months after you retire. Okay, so you get a year and a half of health insurance coverage before you have to go to the open market if you're under the age of 65 years old. If you're 65, lucky for you, Medicare will kick in. Now, Medicare is not free, right? So you definitely need to account for that in your budget as well. But the premiums in Medicare can be substantially reduced compared to going and buying it yourself. Right. So number one is you want to comb through that. You want to figure out, okay, this is what I'm paying now. But when I retire, the cost is going to jump up. So I've got to account for that in my budget. I don't want things to get squeezed when our clients retire. Okay. So tip number one, budget for it. Know what it is. So if you're retiring at 55, from 55 to 65, you're going to have to pay for it on your own. 65 Medicare kicks in. You still have to pay for something, but it'll be hopefully a reduced amount. So we want to include that in the budget. And my team at Falcon Wealth Advisors, we can put all that into your financial plan and project those expenses out so that we have it accounted for. So it's very important. Again, number one tip, plan for that expense, understand what it covers, understand what it costs, and make sure that you're set up. I do not recommend self-insuring and not having health insurance. It's very dangerous, very risky. And that's a very quick way to blow up a financial plan by not having health insurance. Okay, good. Number two tip, it's utilize a health savings account. A lot of our clients don't have health savings accounts, and it's because they're somewhat of an obscure vehicle. Not all employers offer them. And if you're not in a high deductible plan, you actually don't qualify, right? So that's something that you'll know. And certainly you can ask your provider, what are my limits? What are my deductibles? Am I in a high deductible plan? If you are in a high deductible plan, I strongly encourage you to look at opening a health savings account. And we can do that actually for you at Falcon Wealth Advisors. And how they work is basically it's an account that you're basically designating that you're going to use for health insurance needs or health needs, I guess, not necessarily health insurance needs, but if you got to go to your dentist or a doctor and you've got to pay the copay, or you have prescriptions or whatever for medical reasons, right? There's a long list of things that qualify. But what's really neat about a health savings account is when you put money in there from your checking or savings or brokerage account, it actually is potentially tax deductible, right? So it's almost like a 401k or an IRA. We can invest the money for you in stocks and bonds, right? So we can get some growth out of the account. And when you pull the money out, as long as you use it for a qualified health expense, the growth in that health savings account is tax-free. So it's almost having the best of a 401k or an IRA and a Roth because it's growing tax-free, whereas a 401k or an IRA just grows tax-deferred. You still have to pay taxes when you pull money into that. So some would argue it's triple tax exempt, meaning you're going to deduct what you put in there, the money grows tax-deferred, and when you pull it out, it all comes out tax-free, which is really cool. And you don't have to be employed actually to have a health savings account. I believe you can actually contribute into one until you're age 65, until Medicare kicks in. Again, as long as you have a high deductible health insurance plan, right? There are caps too. You can't put $1 million in there, for example. There's certain limitations based on if you're single or if you're married. And certainly we can get into the details, all of that if you are interested. But I think utilizing one of these is going to not only help your tax situation, you also could hopefully get some growth out of it through investing it. And then when you need it later in life, it'll all come out tax-free. Health savings accounts are very cool things. I don't think they get talked about enough. I think a lot of people talk about 401ks and Roth IRAs. I think they miss the boat though on health savings account. Definitely something almost anybody should have, as long as, again, you've got to be in that high deductible health insurance plan. Now, some people will ask me, well, Jake, well, first off, you can't use it to pay Medicare premiums. So you want to be knowledgeable of that. And also they say, well, what if I put money in there and I don't need it, right? Let's say I get to Medicare and since I can't pay the premiums, I don't have a real use for that money. The good news is you don't lose it, right? So the money stays in there. It can stay invested. And in fact, if you do pull it out, and I believe the age on this is 65 as well. If you pull it out and you don't use it for medical reasons at the age of 65 or older, it'll be treated just like an IRA, right? So the good news is you still got to deduct what you put in there. The money still grew tax deferred. And when you pull money out, sure, it counts as income, but it's not like you lost it or paid any penalties. You just didn't get the max benefit. So again, the idea is to open one up, put money in there. You get to write a little bit of off on your taxes potentially. Money goes tax deferred. If you use it for qualified medical reasons, it's tax-free. Pretty awesome. Use that health savings account only if you have a high deductible savings plan and if you're under the age of 65 years old. Okay, good. Before I go into my most important tip, number 3, the most important tip, the whole reason all of you hopefully tuned in to today's show, I want to give a quick plug, a quick commercial to our other content out there. So thank you again for tuning in. You're watching or listening to Upticks. It's on your favorite podcast platform, also hosted right here on Falcon Wealth Advisors Collective YouTube channel. The best way to make sure that you don't miss another episode is to subscribe. So please, I'm very humbled. Our subscriber count continues to grow. So please like, share our content, and don't forget yourself to subscribe, whether that's on the podcast or the YouTube channel. Also, a quick plug to some of our other organic content at Falcon Wealth Advisors. If you can't get enough of our team, Corey Bittner, my business partner, has a show called In the Money Insight that he's kicking out every week. And then Scott Sturgeon, our third advisor, has 2 shows. One called Mental Dividends and the other one called Sports and Money that he's rolling out once a week as well. So 4 shows are coming to you from Falcon Wealth Advisors. They're out there on podcast forms. We kind of write up a little summary in our emails, and then they're right here on this YouTube channel. Okay, so for my third health insurance or health savings tip is, ready? And maybe this comes to no surprise, is I would highly, highly, highly encourage you to seek professional guidance when you're looking at your health insurance. Believe it or not, there are some really good health insurance agents out there. They can navigate all of the different plans, right? So you've got, through the government, right? Healthcare.gov. You've got these pooled investment or these pooled plans that are something a little bit new. I guess they've been around for a while, but another kind of unique way. And then you've got Medicare, which is a whole animal in and of itself, right? And at Falcon Wealth Advisors, we're certainly knowledgeable on the basics of all of these health insurance plans that I'm talking about, but we're really not experts and we're not really drilling down into the details on a daily basis. Yes, we're having the conversations, and yes, we're planning for the expenses, and yes, we're guiding our clients through those decisions, but I highly encourage you to engage with a health insurance agent who talks about this stuff every day, and that's literally their sole job, is to help people get health insurance, right? And if you need a contact, certainly you can reach me at jake@falconwealthadvisors.com, and I'm happy to share some references that I have, the people that I know and trust that do a good job. Right. Number 1, don't go at it alone. Just like I think there's a lot of value in hiring a fiduciary-minded financial advisor, such as us at Falcon Wealth Advisors, I think it pays huge dividends to work with a competent health insurance agent to help you plan for and make some of these big decisions, right? Then you go see the agent. They understand your prescriptions. They understand the marketplace. They understand all the health insurance insurance companies, right? They figure all that stuff out, plug all that in, help you make a good decision that works best for you. You come back to us, hey, this is what it's going to cost. Can you plug it in my financial plan? And then we can run some projections and go from there and help you make a good decision, right? So very important. I highly, highly encourage you. And same with Medicare. Even if you've done Medicare before on your own, it doesn't hurt to seek help from an outside professional just to kick the tires and make sure that you're doing everything correctly. And that you've got your health insurance, most importantly, set up to protect you and your family. And then you're not overpaying for something that you may or may not need. All right, good. So that's all the time that I do have for you this morning. Quick plug also to my social media. So if we're not already friends on Facebook, LinkedIn, Twitter, or Instagram, please feel free to give me a follow or a friend request. I love expanding my network. That's been a lot of fun. As far as fun topics, fall is in full swing here. I guess not full swing, but it's starting to cool off in Kansas City. Really, really pretty time of the year with the trees. I would expect the leaves here behind me to start changing colors here before too long. Been enjoying the outdoors with Rachel and our favorite pooch, Einstein. Other than that, all is well here at Falcon Wealth Advisors. We are still meeting with vaccinated clients in person. For people that still don't feel safe, we're happy to do Zoom calls or conference calls. And hopefully we can open up the office to everyone soon enough. But again, most importantly, I hope all of you out there are staying safe and healthy. Thank you so much for tuning in and hope you have a great week.